This is Brian with PTU, and we'll get started with our presentation in just a few minutes. Before I begin, let me say that we want you today to walk away with all your questions answered. So please get those into the text box. If there's anything that's unclear when I'm presenting or Mike is presenting, we're going to be talking about stock and options today, and specifically the high-flying tech stocks that Mike looks at, and how you can trade those for really a fraction of the cost of the full stock itself. And so we're going to dive into that particular topic today. Let me get on with the presentation. Again, this is Brian Short. I'm one of the partners here at NetPicks and Premier Trader University. And I'll be hosting with Mike on today's presentation. He's going to do the majority of the presentation. He is our stock and options guru. He's our expert here at NetPicks, and he's been trading options for a very, very long time. So let me get into a little bit of what we're going to cover today. First of all, I want to talk about who we are and why you need to listen to us, give you a little bit of a history on NetPicks for those of you that don't know us. We're going to talk today about the high flyers that you can trade with any size account. The great thing about options is you can control a large amount of stock with a very small account, and that's the power that we're going to show you today. And Mike's going to talk about that, how that ratio, I almost call it like a power ratio. What you can win on the winning side versus what you risk on the losing side is really pretty powerful, and that's one of the huge benefits of stock and options. We're going to talk specifically about the areas, the stocks that Mike looks at and where he's making a killing, so to speak, in some specific markets, like Apple and Amazon. He's going to talk about those. Those are his favorites. And then some obscure instruments. He's going to take a look at some of those, some I'm sure you haven't heard before. And then finally, how you can replicate our results and get involved and get some training. And that's the key with any trading skill set, is to get that training so that you can then take that, replicate it, and get that very same result. And I want you to stick around. We do have, as we always do, a special bonus for those that sign up at the end, and for the first 15, we're going to give you some special perks. So be ready for that at the end. First, a little bit about who we are. Again, if you're just joining us, this is Brian Short. I am the picture on the right-hand side of the page here. The left-hand side here is Mark Soberman. He's my partner. And down below here, we've got Will. He's on the call today. He's actually recording this. And TJ, I'm sure many of you have heard of Troy Noonan. Ron works the support. Bob Malinowski is actually a stock and options trader. And then finally, Mike Rykse, bottom left here. He's going to be the main presenter today. NetPicks has been around for about 17 years. And we have been in this business. We were, I think, the third on the internet back in the mid-90s, and that was back before a lot of people even knew what the internet was. And we've been around a long time, had the opportunity to train literally thousands of traders with the different strategies that we trade. One of the things that makes us different here at NetPicks than I think our competitors, all the other competitors that are out there, is that we trade very actively in the markets, and we trade the systems that we demonstrate to you. And I think that is key. It speaks volumes, and we believe in the systems that we present to you. The systems that Mike is going to show you today, he actually uses in his own trading. And so we're speaking from experience when it comes to that. So we've been around a while, been around the block. We understand the pros and cons, the pitfalls of trading, and we relate that very well to our customer base. So that's pretty much it on NetPicks. I'm going to basically turn it over to Mike at this point, and he is going to take us through the balance of the presentation. So, Mike, let me switch over to you, and why don't you get on the mic, say a quick hello, and by that time I should have the projector operating on your side.
All right, sounds good. Thank you, Brian. So good morning. Welcome into everybody. Thank you for taking time out of your busy weekend to join us here today. I know it's your time to get away from work, so I really appreciate you joining us here today. And I think you'll be impressed with what you see, and you won't be disappointed here by the end of the session. So let me get my screen showing. And Brian, just stop me if it's not coming through. But we should be good to go at this point. So we're going to talk about options today. For those of you that have heard me talk in the past, you know that options are a big part of what I do. I've been trading now for 11 years. And really in the past 11 years, the options side of things have really changed my life. And I know that sounds a little extreme, but it's really given me incredible flexibility, incredible financial freedom. And I want to share with you today on how I do that. And hopefully you can learn some information for how you can take the next steps in order to achieve the same success. So just a little bit of bio information on myself before I get into the presentation. Like I mentioned, I've been trading for 11 years. I started back in college. I was a finance major at the time. I was really in pretty deep with some research projects on how the markets worked, and I was just fascinated with the overall profit potential. Okay, unfortunately, as a broke college student, I had no money to work with. I had no money to benefit from all the knowledge that I was gaining. And like any impatient college student, I didn't want to wait till I graduated to start making money from everything that I was learning. So I dove in a little bit deeper, and that's when I discovered the options markets. And what really fascinated me was the fact that I could play some of these high-priced names with as little as a couple $100s. Well, that was a perfect scenario for me because I didn't have much to work with. So unfortunately, I had some success early on. I started to trade around earnings, and the reason I say unfortunately, it created some bad habits. Okay, I was trading off of a hunch. I was trading off of information that I was finding online. I had no system to use. Okay, so immediately when I started to have success right away, I thought, hey, this is easy. Little did I know that the market never makes it easy on anybody. And in fact, the market has an uncanny way of punishing those people that are not disciplined. They don't have that system that puts the odds in their favor. So what I did is I knew I had to take a step back. I had the chance to go down to the floor of the CBOE, which is the Chicago Board Options Exchange, for some training. And once I started to interact with some of the professional traders down there, I started to realize how different they approach the markets. Okay, they were thinking 3 or 4 steps ahead. They knew exactly what they were going to do before they even got into a trade. Well, that was so different than my style of just winging it. Okay, I traded around earnings, had some success, then ended up giving it all back and then some. So I was really at square one. And what I decided to do is, as I left that experience on the floor, I decided to really take some time to invest into a system. I had to have a methodology that put the odds in my favor. And that's when I came across NetPicks. And the thing that really sold me on NetPicks, the thing I really appreciated, was they were not like other businesses out there that were promising instant riches, overnight success. Okay, they weren't promising me that. They were promising me that methodology that I was looking for that would put the odds in my favor long term. So I really, that was the breakthrough for me. Once I started to use the NetPicks systems, I started to see consistent profits, and I've been trading ever since. So I do day trade as well, but if, like I mention this all the time when I speak. If I were to have to pick one style of trading for the rest of my career, it's going to be with options. There's no hesitation there. I don't even need to think about it. Okay, when I look at my overall P&L over the past 11 years, it's fun to day trade at times, but I make the most profit by far when I'm swing trading with options. And I'm going to show you how I do that here over the next few minutes. Okay, one of the issues that I ran into when I started working for NetPicks, it was very difficult to get people involved with options. And I hear all the same excuses. I hear all the same reasons why somebody can't trade options. They're too complex. They're too expensive. I don't have the account size that can handle the risk. I really just need to trade Forex. I hear that all the time. Over the past couple of years, there's been a lot of discussion on derivatives. Well, derivatives, they're just too risky. Okay, you really should shy away from those markets. And all of those reasons that I just mentioned, they couldn't be further from the truth. Okay, and we're going to discuss those here over the next few minutes. Some of my favorite reasons for trading options, number one is the time aspect. Okay, I look at my swing trading charts less than 20 minutes a day. I'm not stuck in the office staring at every tick. That's not necessary. Can you day trade in 20 minutes a day? No, you really need a couple of hours on a consistent basis. Okay, so this is really a perfect approach for those people that want to get their feet wet in the market, They want to get involved. You may have a full-time job, part-time job, whatever it might be. This is a perfect way to stay involved regardless of what your schedule looks like. Okay, I've traded from all over the place. I've traded from an office. I've traded from the road. I've traded on a vacation, from the golf course. It just gives me incredible flexibility. Okay, now, a lot of times I get the response, well, you can do the same thing with Forex, and it's true. The problem I have with Forex is it's a 24-hour market. Okay, it could be the middle of the night. I'm sleeping, and I wake up, and all of a sudden I think about the trades that I have on the table and how they could be moving without me in front of the screen. I don't necessarily like that feeling. I like the feeling when I'm trading options when I know the market opens at 9:30, it closes at 4. Okay, if I wake up in the middle of the night, there's nothing I can do. Okay, there's nothing I can do until 9:30 the next morning. I like that feeling. Okay, it allows me to set my trades, and it allows me to move on with my life. Okay, when you also think about the trade cost. Okay, when you're day trading, if you spend 2 hours a day day trading, how many people track their trade costs and look at that at the end of the year? Okay, trade costs add up extremely quickly. You're going to spend thousands of dollars in trade costs at the end of the year. When I'm swing trading, I'm going to show you that there's days where I have nothing to do. Okay, I'm only taking a handful of trades every week. That's great for me because it keeps my trade costs in check. Okay, if you're trading Forex, you've got that spread cost that adds up quickly. Okay, that's why there's a lot of factors working in your favor when you're swing trading with options. The leverage is also a huge factor. Okay, let's face it, we're all retail traders. We all have access to limited funds. Okay, I don't care if your account size is $5,000 or less or $500,000. We all have access to limited funds. So we have to make sure we make the best use of that capital. That's why I like to trade leveraged products. The options allow us to really look at a whole universe of stocks and ETFs, regardless of their pricing. Okay, that leverage is extremely important for us retail traders. Can you trade Forex with leverage? Absolutely. The issue that I have with Forex, it's not a regulated market. Okay, there's no centralized price. Your broker can get away with a lot of questionable tactics. Okay, it can be very tricky to be successful long-term with Forex. The results look great on paper. Is it as easy to replicate those results in real time? Well, I think, and it's in my opinion, that it's trickier. Okay, when you start to factor in that spread, when you start to factor in that the markets can be manipulated by your broker, that's tricky. On the options side, it's very regulated. You're trading on centralized exchanges. You don't have to worry about the broker jerking you around. That's a great position to be in. That's why I love these markets. Okay, how about the penny stock side of things? I get emails all the time about low price stocks and penny stocks. Well, you're going to run into the same issues. They can be manipulated. It does not take much to move those markets. I don't want to be backed into a corner and forced to trade specific markets just because I have access to limited capital. I want to trade the high flyers. That's what we're here to talk about today. I want to show you how you can play the names like Google and Apple and Amazon. I want to have that flexibility. The consistency, this is another huge factor for me. Okay, I work with traders on a daily basis. One of the biggest mistakes that I see is those traders that are scanning hundreds of names, hundreds of products on a nightly basis, trying to find the next great candidate. Okay, let me ask you a question. Can you honestly tell me that if you were to pull up a scan and pull up a few names that you've never heard of, can you trade those with confidence? You have no idea what the company is. You have no idea how long an average trade takes. You have no idea when they release earnings. For me, when you factor all those things into the consideration, I can't trade that with confidence. I want to trade the same names consistently over time. My watch list, it's amazing how it has not changed much over the past few years. Will I add some new candidates every once in a while? Sure. I mean, the markets will change over time, but over the past 4 or 5 years, I've traded the same names day in and day out. That's a huge advantage for me. I know exactly how they move. I know exactly how long I'm in a position. I know exactly what my typical risk is. That allows me to trade with confidence. Finally, the flexibility. Options are the only financial product out there that will allow you to benefit from any type of market movement. Okay, sure, there's a lot of products out there where as long as the market's moving up or down, you can make money. But options are the only product out there that will allow you to make money if the market does absolutely nothing. If the market moves straight sideways, there's strategies that you can use to benefit from that. Well, as a trader, I want to have that flexibility. I want to have that. I want to have those tools available to me as part of my overall toolbox. That's why it's so important for every trader, in my opinion, to have options as a part of your overall trade plan. Okay, with options, we're able to play the downside as easy as the upside. Okay, if you're like me, you get these comments all the time. I interact with business people on a regular basis, and with the market at all-time highs, like they are now, well, I get the comment, well, Mike, you must be making a killing, and it's been a good year. Okay, I'm extremely profitable, but I'd actually rather have the market show some two-way price action. I'd rather have some swings back and forth, because on the moves to the downside, people panic. Things happen quicker. Actually make more money when the market moves to the downside. Okay, and we're able to do so with a lot safer strategies. When you short a stock, okay, is that going to tie up a lot of capital? If you were to go ahead and short Apple stock, is that going to tie up a lot of capital? Absolutely. But there's option strategies where we can buy a put or put on a spread where it actually benefits from that market moving to the downside, and it does so for a fraction of the cost. That's the type of product that I want to have on my side. That's why I love trading options. Okay, so let me ask you this. Okay, if options allow us to get in at a lower cost, does that increase our odds of success? Okay, I just got done mentioning that we all have access to limited funds. Okay, if you've got access, let's just use a $25,000 account for an example. Okay, just to keep things simple and straightforward. Okay, if you've got access to $25,000, is it better to put on decent sized positions on 3 or 4 products, or do you increase your odds of success if you take smaller position sizes and spread that across 15 different positions? I would much rather have you use the options, lower your cost, and take more trades. Okay, and that way you're not overly exposed to just a handful of names. That's what the options allow us to do. Now, can you do this with trading individual calls and puts? You can. Okay, we're going to take a look at a few of those trades here in a minute. But you can also take this further. You can look at spreads. We're going to talk about vertical spreads here today, because vertical spreads really are the foundation for a lot of the more advanced strategies. Okay, when I say a vertical spread, basically what we're looking to do is it's the simultaneous purchase and sale of options of the same type, calls or puts. Well, what does that mean? Let's take a look at Tesla. Tesla Motors, symbol TSLA. Okay, let's say we're bullish on Tesla and we want to go in and buy a 135 call. But we look at that call option and say, okay, it's pretty pricey. I really don't want to spend that much money on a call option. Well, what happens is when we buy that 135 call, but we also sell the 145 call at the same time. The sale of that 145 call helps finance the purchase of the 135 call. Now all of a sudden we're able to lower our cost. We're in at a lower price. We're in a defined risk position. We know exactly what our worst case scenario is. We know what our best case scenario is. And being in a defined risk position, that gives me the comfort that I need to leave the office, move on with my life, stay involved in the markets and move on. Because regardless of what happens, okay, if something tragic happens and the market collapses, well, I'd hate to see that happen. But as far as my positions go, it's not a concern to me because I already know what my worst case scenario is. Okay, so we're going to dive in a little bit deeper. We're going to look at a few examples on the charts here in just a moment so you can kind of see this whole idea in motion. Okay, so we just talked about buying a vertical spread. Okay, that's a directional bet. You make money as long as the stock moves in your direction. But you can also sell a vertical spread. And what this allows you to do, by selling a spread, now all of a sudden you're collecting premium, you're being paid to put the position on. What that does is it allows us to win in 2 out of 3 possible market directions. We all know the market can go up, down, or sideways. Okay, if we were just to buy a call or buy a call spread, we make money if the market goes up. But if we sell a put spread to open, now all of a sudden we make money if the market goes up. We also make money if the market goes sideways. Now we've increased our odds of success because we make money in different types of market directions. That's pretty powerful. That's why I love options. There's so many different ways that you can use them. Okay, it's a very safe strategy. Like I mentioned, it's a very defined risk position. That's why I like trading these types of positions. Okay, so I mean, it all looks good on paper. Okay, you may not understand what I'm talking about there with the vertical spread, so let's kind of put it in motion. Let's take a look at the charts. There's two reasons why I'm successful trading options. Number one, the different strategies that I talk about, the vertical spreads, the levers that are offered with options. They're just incredible products to trade. Okay, that's number one. Number two, the system that I use. Okay, a lot of times I hear from traders it's you can't be successful picking stock direction. It's the hardest thing to do. Well, I'm going to disagree with that, because if you've got the proper system in place, I think it's pretty easy to look at stock direction. And let's take a look right now. Let's actually move over to the chart so you can see exactly what I'm talking about. Okay, so the first thing that we're going to do, we're going to check in on Apple. Okay, and what you're going to see on the chart, this is the PTU Active Swing Trader system. Okay, this is a system that I use day in and day out. This is by far the most powerful system that I've ever used. Okay, hands down. What you're going to see here over the next few minutes, it's made me a ton of money, and that's why I want to share it with you. So what we're looking at here, we're not looking at 20 different indicators. We're looking at my sentiment indicator, which is the histogram at the bottom. We're looking at my signal line, which is the blue line moving across the middle of the screen. And then we've also got the calculator, which I'll come back to here in just a minute. The calculator is what's printing the dots on the charts. Okay, one of the reasons why this system is so powerful is through the use of range charts. Okay, a lot of times traders will be stuck using a time-based chart, an hourly chart, or a daily chart, a weekly chart. The issue I have with time-based charts, they're forced to print candles or bars based on a set amount of time. The market may not necessarily be moving though. So if you're looking at a time-based chart, you've all probably seen this happen. When the market slows down, those time-based charts, they can get pretty choppy. They're still forced to print candles even if the market's not moving. Well, if I look at a range chart, right now I'm looking at a range chart of 6.18 on Apple. What that's doing is now we're printing bars every time Apple moves $6.18. Okay, what that does is it filters out a lot of chop for me, because if the market's not moving, the chart's not forced to print bars. Okay, for a bar to print, that could take 2 minutes, it could take 2 hours, it could take 2 days. It all depends on how active the market is. I get the question all the time, Mike, what do you use as a chop filter? Well, this is a huge filter for me that's built into the system through the use of range charts. Okay, some of you might be asking, why are you using a range of 6.18? Well, there's a calculation that we look at once a month. It takes literally less than 30 seconds to make the calculation. It's very, very easy. So at the end of every month, we come in and we make that calculation and we set our chart up with that range setting for the next month. Okay, this is another, it's another filter that's built into the system, because we're easily able to adapt to the changing market. If the market continues to be volatile, if volatility expands, we see a lot of nice price action, we'll start to bump our range up through that calculation that we make at the end of the month. If volatility starts to contract and we're not seeing the great movement, not a problem. Our calculation is going to give us a lower range setting. That allows us to really stay in tune with how the market's moving ongoing. Okay, now the second part to this is the calculator. Okay, this was another breakthrough for my trading. Okay, because when I first started, I was just stuck looking at indicators on a chart. I would guess where to get in, I would guess where to get out. And a big issue that I see with traders is once they get into a trade, they freeze. They don't know when to get out. Well, with the calculator, what it does is it takes a look at my indicators and it prints my entry points, which are these crosses here. It prints my targets, which are the white dots, and it prints the stops, which are the red dots. Okay, everything is defined for me before I ever get into a trade. This is how I'm able to get in and out in 20 minutes a day. When I come in, am I stuck making calculations, trying to look at targets and stops? No, all I'm doing is looking at the chart, looking for the dots that are representing my targets and stops. It makes life extremely easy for me. Okay, so let's take a look at this Apple example here. This is the most recent trade that was just closed out here this past week. Okay, so the system, I came in, the system was telling me to get long at 437.26. Okay, it gave me a first target at 449.62, a second target at 456.42, and the stop was initially at 418.72. Okay, do I want to go ahead and buy the shares of stock at $440 a share? No, I really don't want to tie up that much capital. Could we buy a call option? We could, and let's take a look at how that would have played out. So instead of buying the stock, I came in and I bought the August 430 call for $13. Okay, every option represents 100 shares of stock, so my total cost is $1,300 per contract. Okay, some of you might be looking at it saying that's still, I'm like, that's pretty pricey. I don't want to pay that much per contract. Well, we talked about this earlier in the week in Tuesday's webinar. You can trade mini contracts. The mini contracts represent 10 shares of stock. You're able to get in for a tenth of the cost. Okay, so now all of a sudden you're looking at a $130 investment. Well, that's pretty manageable for everybody in here. Okay, so we hit target. You can see here it was a pretty straight move up to target. Once I hit that target, there's no guesswork. I know it's just time to get out. So I sold out of my position for $27. That gave me a $1,400 profit, or 107% return in less than a week's time. Okay, is that attractive to anybody? Okay, that's one trade. Can you see now that, okay, with a $1,400 profit in less than a week's time, is that a good way to supplement an income? Could that potentially replace an income? That's what gets me excited about these products. Okay, let's take a look at another way we could have played this. Let's take a look at a vertical spread. Okay, let's say we wanted to lower our costs. We really didn't want to trade the mini options. What else could we do? Well, we could go in and buy the 440, 455 call spread. So what does that mean? Well, it means I'm buying the 440 call, so very similar to what we just got done talking about down here with the 430 call. But instead of just buying the call, now we're selling the 455 call at the same time. So by putting that position on, we're lowering our cost. We're able to get in for $4.82. Okay, so for $482 per spread, can you see how we cut our cost here considerably? Now all of a sudden we're in for a third of the cost. That's why this type of trading is so powerful. So once we hit target, same methodology here. We're just selling out at our full target, sold it out for $10.30. That gave me $548 of profit, or 113% return. Okay, so now all of a sudden I've given you two ways to play Apple. Okay, we've both returned over 100% on the options. That's pretty powerful. Okay, now in all fairness, I mean, it was a full winning trade, okay? And lucky for me, it was a full winner on the most recent trade. What does the system do throughout the year? Well, let's just take a look at the chart that's showing here. Okay, I'm going back to the end of April. That's what I have shown on the chart. Okay, just with the trades that are shown here, I've got 7 trades showing. Okay, it's won 7 trades in a row. Okay, winner on the upside, winner on the upside, winner on the downside. You can see here over the past number of months, the system does a great job of identifying the trends. Okay, and a lot of products, we're winning 70% plus on every setup. So, I mean, that's extremely powerful. When you start to combine a 70% win rate with the returns on the options on a winning trade, we're returning 107%. That's a pretty powerful combination there. Did I change anything to this chart? Okay, I just said I looked back to the end of April. Did I change anything on this chart just so I could identify the winners for you guys? No, it's just the system does a great job of identifying the movement. Okay, now it helps that we're able to look at the high flyers. We're able to look at the stocks that move, like Apple and Google and Amazon. But that's really what we're looking to accomplish. We want to trade the best names. We don't want to be locked in to trading a low price stock that we've never heard of. We want to trade those high flyers. So Apple has just been dynamite. It's been a great performer. We talked about this last long trade on Tuesday as well. This was another $1,400 winner. So with the 2 trades that took place in July, okay, you're looking at $2,800 of profit if you just went with the straight call. Okay, you're looking at over $1,000 of profit if you bought the vertical spread. Okay, that's extremely, extremely powerful. That's why I'm excited about these markets. That's why I love to come on these webinars and talk about these products, because they're extremely powerful. Let's take a look at another example. Let's take a look at Google. Okay, this is an even better example because now all of a sudden we're looking at a $900 stock. Okay, is this in the realm of possibility for many traders to go in and buy a $900 stock? Probably not. I mean, unless you want to tie up a ton of capital in one position. But it tends to be a pretty volatile name. There's a lot of good movement there on Google throughout the year. I want to trade names like this. So we're going to go back and we're going to look at this trade from, this was back in early July. The reason I'm filtering out these trades over here on the right, I don't like to trade around earnings. Okay, I learned my lesson the hard way 11 years ago. Okay, so I'm very cautious around earnings releases these days. So could I show you these trades? Yes, there's some profitable trades in here for sure. I'm going to go back to the last trade that I closed. Okay, this was before earnings. So the system, everything is the same. Does this set of indicators, does it look very similar to what we just showed on Apple? Sure, nothing changes. The only thing that changes here is the range setting. We're looking at a range of 6.71. The range is going to be different depending on the stock that you look at. Again, it's a very, very quick calculation that you make once a month. Okay, so if we were to look at the setup, get this data window out of the way. So the system was telling me to get long here right around the 885 level. Okay, could I come in and buy the individual call? Well, we could, and let's take a look at that right now. So if I bought the July 870 call for $31.50, that gives me control of 100 shares of Google at $870 a share, and I'm paying just over $3,100 per contract. So it's pricier. I mean, we're trading a $900 product here. So is that realistic for everybody? Maybe not, but keep in mind, you can trade the mini options. You can get in for 1/10 of the cost. Okay, you could get in with a mini option for just over $300. That's pretty reasonable. Now all of a sudden you're able to participate in a high flyer for a fraction of the cost. I hit full target, sold out of my position, booked $1,400 of profit. That's a 45% return again in about a week's time. That's pretty typical for us. A week or less is our typical holding time. Okay, so now we've looked at two trades. We looked at the trade on Apple and Google. It's $2,800 of profit on just 2 stocks. That's pretty powerful. Okay, what about lowering our cost a little bit? Okay, we don't want to trade the mini contracts. What if we look at a vertical spread? What if we look at the 885 and 905 call vertical? What does that mean? Well, that means I'm buying the 885 call. I'm selling the 905 call at the same time, and now all of a sudden I'm able to lower my cost down to $8.80 or $880 per contract. So by putting on the vertical spread, notice here how I'm getting in for a fraction of the cost. Okay, this is why I love to trade options. We hit full target. I sold out of my position for $260 profit. It's about a 30% return. Okay, would you be happy with a 30% return in a week's time? Absolutely. And those profits add up quickly. So now I've shown you 2 ways to take these options trades. You can buy a call or you can buy a vertical spread. Okay, does the system perform well? I mean, I just picked the last trade that I closed. You can see here how we've had a winner on the short side, another winner, partial winner on the upside, full winner on the upside, partial winner on the downside, full winner on the upside. It catches the swings incredibly well. So for anybody that wants to throw the argument to me that you can't pick stock direction, well, I feel pretty confident with the active swing trader that I can do just that. Okay, let's talk about selling a spread. Let's talk about a third way that you could take a trade. And let's go over to Tesla. Now, I'm fully aware Tesla is not a tech name. Okay, but it's definitely one of the high flyers. Tesla Motors is definitely one of the volatile names right now. So I want to take a look at it. All right, so we're going to take a look at this most recent long trade. This is the last trade that was closed out. Okay, so we're bullish on Tesla, right? Could I buy a call? Could I buy a call vertical? Well, I could. But if I look at the options, I see the options are pretty pricey because they're pricing in a high level of volatility. Okay, so what if I come in and I sell a put vertical? I sell a put spread. That's actually a bullish position. But what it does, if I come in and buy, if I sell the August 130, 120 put vertical for $3.97, I'm collecting $397 per spread. Okay, I want the stock to move up, but what this does in my favor is it allows me to make money if the stock goes up, but it also allows me to make money if the stock does nothing but go straight sideways. So now all of a sudden, by selling a put spread, I make money in 2 out of 3 possible stock directions. Okay, so in this case, the stock ended up moving up. It hit my full target. And I was able to buy back the spread. Remember, I sold it to open. I bought it back for $3.10, and I booked the $87 of profit. It's a 28% return. It doesn't look like a lot. I mean, it's an $87 profit or a 28% return. Is that really impressive? I'm still happy with a 28% return, but remember what I did. I increased my odds of success by selling the spread. Even though I gave up some profit potential, okay, if I would have made more money by just buying the call here, but by selling the put spread, I increased my odds of success because now I made money if Tesla did nothing but go straight sideways. Okay, can you see how useful having that strategy at your disposal is? Okay, it's extremely powerful. It doesn't matter what the market's doing. I'm not stuck waiting for one type of market to set up before I can make money. I can make money regardless of what the market decides to do. So I've shown you 3 different ways that you could take options trades. Okay, some of you might be looking at that saying, Mike, I still don't really understand what you just got done talking about. Okay, I'm still new to options. Okay, not a problem. Let's go back to the presentation here for a moment. Okay, some of those returns, are those exciting? I mean, I showed you a few different stocks. I could take a look at Amazon as well. We just booked a nice profit on Amazon. Okay, do those returns look impressive? They do. I showed you over $4,000 of profit. Okay, but how do you know what option strategy to use? What criteria do you look for? How do you grow and scale your account? Okay, all valid questions, and that's why I created the PTU Options Mastery Program. I've been trading for 11 years now. I'm taking the last 11 years of education that I put myself through, and I'm combining it into one course, and I'm going to teach you everything in 1 month's time. I'm going to save you the trouble from doing all the research yourself, reading books, researching stuff online. You're not going to have to worry about that. I've put everything together in one spot. Okay, to be honest, the first couple of years of my trading were not very smooth. They were very bumpy. I didn't have anybody there to help me through the learning curve. Didn't have anybody there to hold my hand. Okay, if I had a question, I was stuck researching it on my own to try to find the answer, and that was very frustrating. So I was determined early on. I said, if I'm able to make this thing work, if I'm able to become a successful trader, my goal is to put a product together that would help the newer trader get through that learning curve a lot easier than I did. Okay, and that's the whole idea behind this program. So what does it look like? Well, here's what you get. Okay, that complete active swing trader system, all the custom indicators, that powerful trade calculator that I showed you, they're yours for life. I'll share with you all the best settings, all the best markets that I look at. I'm an open book. I'm sharing all my secrets with you. Okay, 2-day live training. We're going to hold a live 2-day training where I'm going to walk you through all the ins and outs of trading the system. We'll take a look at live market conditions. I'll walk you through all the different ways that I use the system. What are the best products to look at? What are the best markets to look at? We're going to look at that all live in real time. Okay, I'll give you access to 3 live Q&A sessions a week. Every Monday, Wednesday, Friday, I'm going to log into our training room and I'm going to show you how I trade live in real time. I'm not talking about demo accounts here. I'm talking about my live account. Okay, I'm a full-time trader. I make my living in the markets. Okay, so you better believe that I'm going to be committed to making sure we're profitable. If I'm not profitable, I can't pay my bills. Okay, that's why it's going to be powerful to get into that room, see these markets traded live, see how I'm doing it live. You can ask questions in real time. That's extremely powerful. Okay, if you're totally new, okay, if the stuff that I've covered so far is way over your head, not a problem. I've put everything, all the basics together into an Options 101 course. So before we get to the 2-day live training, you'll be able to go through the one-on-one course, which is available immediately. It's already available on our website. so you can review the basics. We'll strip everything down. We'll start to build that foundation that we can work off of once we get to the live 2-day training. Okay, and I've put everything together on one owner's club. Okay, one of my biggest frustrations when I first got going, as I started to research different products, I really got frustrated when I was trying to keep track of documents and keeping track of DVDs. It's very frustrating. I've put everything together on one site. Okay, so you can access this information wherever you have an internet connection. Okay, I'll give you 30 days access to that site. Okay, so what does the 2-day live training look like? Well, it's coming up at the end of August 27th and 28th. Okay, it'll be held live online. You don't have to worry about travel arrangements, booking flights and hotels, not a problem. We'll do everything online. So once you log in, we're going to cover all of the details on how I trade the PTU Active Swing Trader system. I'm also going to walk through 8 different option strategies. Okay, I walked you through 3 different ways that I use options here today. Okay, there's 8 different ways that I can use them. Okay, now some of you might be looking at that saying, oh, that's just too much for me. I just want to know the basics. That's fine. I'll show you how to trade individual calls and puts. But I fully realize that there's traders that want to take it to the next level. They want to learn the advanced strategies. Well, I'll give you all the tools that you'll need. I'll walk you through all the strategies that I use on a very regular basis. I'll give you all my best trade plans. Okay, I'm going to release 25 trade plans to you guys. Okay, these trade plans literally take hundreds of hours to create. Okay, I really wish I could pay somebody to do this work for me. Okay, one of the things that I hate the most is to dive in and do the testing. It's painstaking work, but that's the only way that you're going to be able to trade with confidence. Well, I'm going to allow you to view my trade plans. You'll be able to piggyback off of all my hard work and have access to those. Okay, if you can't attend live, if you're busy, if you've got a job that you have to be at, not a problem. They'll be recorded. They'll be posted on the owner's site so you can review them as many times as you need to. Okay, here's the different strategies that I'll be talking about. We'll definitely be talking about trading just straight calls and puts. We'll definitely be talking about verticals, but we'll also be talking about ratio spreads, butterflies, iron condors, straddles and strangles, and calendars. Some of you might be looking at that saying, they'll sound pretty advanced, pretty complex. Don't worry about it. I'm going to give you a step-by-step checklist to go through when placing these trades. I'll give you the exact criteria that I'm looking for when placing these trades. If you want to keep it basic and just trade calls and puts and some verticals, that's fine. But I also want to over-deliver it and give you the material that you can take and run with this as far as you want to go. Okay, and of course we'll also walk through the active swing trader as well, showing you all the best settings, the best setups, the best range settings. We'll walk through all of that in the 2-day training. Okay, the 3 live calls every week, every Monday, Wednesday, Friday. This is really cool. This is really a big feature that I wanted to include because, like I said, when I first got started, when I started researching how to use these strategies, it was one thing to understand them on paper. But when you go to make that first trade live, it's difficult. There's going to be issues that arise. There's going to be questions. If you want me to review a trade before you take it live, you can log into the training room. I'll walk you through how I would do it. Okay? Ask any question that you want. Log in as often as you need to. I'll be trading in there live. I'm an open book. You can pick my brain as much as you want. That's really all I wanted 11 years ago, was somebody to walk alongside me and to make sure that I was successful with this. That's what I'm trying to provide for you. And they will be recorded. If you can't attend them live, again, just like everything else, it'll be recorded and it'll be placed on the Owners Club. Okay, so the 101 course, like I mentioned, if you're brand new, not a problem. We'll walk you through all the key terms and definitions. How is an option priced? How do we select the best strike price? We'll walk through all the basics. You'll be ready to go for that 2-day live training coming up at the end of August. Okay, this is a lifesaver. I can't tell you how long it took me to master the very basics. Well, I've put it all together in one spot for you. And it's available immediately upon signing up. Okay, so the Owners Club, you're going to have access to the live training room like I just got done talking through. We'll keep track of a model portfolio where we'll track trades from start to finish, so you know exactly what to expect from the system. Okay, we'll walk through specific option strategies. We'll walk through all the trade plans. We'll keep track of all the trade plans right on the owner's site. And this is really a huge selling point. Okay, these are roadmaps. These are exactly how I take my trades. Okay, again, there's hours and hours of testing that go into creating these plans. Okay, another breakthrough in my trading was the use of this trade assist automation. Okay, when you look at this word automation, I don't want you to misunderstand this. This is not designed to be a robot. It's not designed to flip a switch and to let it trade for you. This is used in the testing process. So we already showed you the active swing trader here today. Okay, but what happens when we really start to see the market explode, and let's say we're not only hitting our targets that are posted in the charts, you're really just blowing through them. Well, maybe it's time to extend your target out a little bit so you're not leaving as much profit on the table. That automation will allow you to evaluate the performance based on moving the targets. What if the market's not moving as much? What if we want to go for smaller setups? We're not quite hitting the full profits. We're getting out with a lot of partial profits. Well, we can easily evaluate what the system would do if we move the targets in closer. This saves hours on the testing process. And I want to give you access to this because I don't want you to rely on me for trade plans going forward. I want to give you all the tools that you'll need to be successful on your own. So if we find a new name that we like a couple months from now, a couple years from now, you'll know exactly the process that you'll need to go through in order to create that trade plan. We're huge believers here at NetPicks in testing. Now, we're fully aware that historical results do not guarantee future performance. But by going through this testing, by giving you these tools that I use in my testing, that's going to allow you to build confidence in the system. Okay, could you take my word for it and just say, okay, well, Mike said the system produces 70% winners. Could you take my word for that? You could. But are you going to be as confident in the system as you would be if you did the testing yourself? No, you really need to dive in and convince yourself that the system works. Once you do that, it's amazing how easier trading is going to be. Okay, so I'm going to give you 30 days access to the Owners Club for free. After that, it's $97 a month. There's no obligation here. You can cancel anytime. Okay, if you cancel the indicators, the systems, those are still yours for life. Okay, the only thing you'll lose access to is the ongoing training and support. So if you feel comfortable after 30 days, that's great. You can cancel. If you need a few additional months, that's fine. That's what we're here for. Okay, so I showed you some of the results. Okay, I've showed you a couple of $1,400 winners on Apple. We had a $900 winner on Amazon. These are all just the most recent trades that were closed. We had a $400 winner on gold, almost a $700 winner on Netflix. Okay, those are great returns. What happens over time? Well, we're winning at an 83% clip on TLT. We're winning on 71% of our trades on the Japan ETF. Okay, so when you start to combine a 70% win rate with these types of returns on the options, gosh, that's a powerful combination. That's what I want you to put on your team. That's what I want you to see in your own trading. So here's the good news. Okay, for taking time out of your Saturday morning. Okay, I know it's the weekend and you want to move on with your weekend. So as my way of saying thank you for joining us, if you're part of the first 15 to sign up, I'm going to add 2 additional one-on-one personal coaching sessions. Okay, if you want to connect with me one-on-one to review your portfolio, if you want to have some questions before you place your first couple of trades, we can connect. I'll be happy to work through any questions that you might have. I'll also add on 30 days in the Owners Club. I'll give you 60 free days in the Owners Club. And I'll also knock $200 off the price. Okay, now here's the bad news. I've got to limit this to 35 people. I would love to bring on 100 people, but I can't support everybody if I bring on that size of a class. So once we hit 35, I'm gonna shut it down. Okay, I want to make sure that the class is small enough to where you get the training that you need. You get the individual training that you need to be successful. Okay, so I can't guarantee that these spots are going to last very long. So if you're ready to go, you'll want to make sure to sign up here quickly. So what is the value here? Well, the active swing trader system, we've placed a value of just right around $1,500. I think this is vastly undervalued. Okay, I just showed you over $4,000 of profits on recent trades. Okay, it's a pretty powerful system. The 2-day training, that's a $1,000 value. The Options 101 course, that's a $700 value. The 3 live sessions a week, $300. The Owners Club, $97. So all in all, I'm giving you close to $3,600 worth of content here. I'm not going to charge you anywhere close to this. I'm going to give this to you all for a fraction of the cost. So what are we looking at? We're looking at $12.97. Okay, I just showed you how in one trade on Apple you can return $1,400. In one trade, you've got this system paid for. Okay, one of the big issues that I had when I first started out, I wanted to make sure I had a good majority of my capital to trade with. I didn't want to spend it all on training. And that's my goal here for you. I'm trying to give you a ton of content. At the same time, I want to give you the chance to keep most of your capital to trade with. If we need to split this up into 3 payments, be more than willing to do that. We'll go through 3 payments of $497. Okay, so everything that I just got done walking through, the system, the training, the live training room, all of that is included here for $12.97. Okay, so if you're ready to go, type this link into your browser, netpicks.com/options. We can go ahead and get you up and running here today. You'll have instant access to the Owners Club, and then you'll have access to the live training here coming up at the end of August. Okay, but I want to take it a step further. I want to take all the risk off the table. Okay, I'm sure you can all relate with me. You buy a product. The minute you buy the product, they take your money, and that's the last you hear from them. Okay, there's no ongoing training. Well, I don't want you to feel that this is a risky investment. So I'm going to give you a 45-day unconditional money-back guarantee. Okay, at the end of 45 days, if the system's not producing like I just showed, if you're not happy with the training that you received, return it. No questions asked. And I'll give you all your money back. Okay, I'm taking the risk here. All right, that's a pretty cool feature. All right, so really there's no risk on the table here. I'd really encourage you to take advantage of one of the few seats that we have here today. And of course, like any other NetPicks product, we've got a team of people here that are ready to support you through the sign-up process, through the setup process, the training process, regardless. We've got a whole team of people here that are ready to answer your questions. So you don't have to worry about just being left out in the dark here once you buy the program. So if you have any questions, let me go ahead and give this back to Brian, and we'll start to work through the questions. Again, here's the link to sign up, netpicks.com/options. And if you want to talk to us in person before you sign up, here's the phone number and the email address. We'd be happy to work through any questions that you have as you look to sign up here today. So Brian, let me go ahead and give it back to you, and we will start to work through some questions.
All right, thanks, Mike, and good presentation. It always gets me excited every time I see you present that, and I've seen it a number of times. A lot of good questions being asked here behind the scenes. Some of them I've kind of waited until the end here to have Mike answer, very interactive. So if I didn't answer your question in text, don't worry. We'll definitely get it answered here on the audio portion of the Q&A. So one of the very common questions, I'm just going to get this one out of the way right off the bat here, is what platforms are supported with the Stock and Options program? So very simply, we work on TradeStation, which is what Mike demoed today on. So you have to chart with either TradeStation or NinjaTrader. Okay, those are the 2 charting options that we have. And the Trade Assist that Mike talked about, the indicators that Mike showed you, all work on those platforms. Now, with that said, you can choose to trade with any broker of your choice. You have to chart with those 2 platforms, but then you could choose Interactive Brokers, you could choose Thinkorswim to trade with, and Mike actually does a combination of exactly that. He charts on TradeStation, trades at Thinkorswim. So that part of the equation is really up to you where you trade. So that's how we're configured at this point. And Jeff, thank you for the kind feedback there. He says, thank you, Mike. Really enjoyed the presentation. So thank you, Jeff. So that's the answer for the platform, the platforms that we support. I'm going to work backwards here through the questions. So Mike, if you're ready, I'm going to throw these at you kind of rapid fire. Al also giving us some good feedback here. He says, Mike, really good presentation. I watched several times and very, very helpful and knowledgeable. So thank you, Al, for that. I'm just, okay. Okay, Mike, maybe you can answer this one because I've received a number of these. What would be your recommendation where to open up an options account? So answer that, Mike, for those people maybe located in the U.S. region. And I had another gentleman that was asking for the European region if you had an opinion on that. So kind of a two-part question there.
All right, sure. Great question. My number one choice on the broker side is thinkorswim. Okay, it's an extremely powerful platform. There's a lot of useful tools on there. The commissions, they're pretty good negotiating commissions. So they're very comparable to other brokers out there. So I definitely would look into thinkorswim as your number one option. Other brokers that I've used in the past, Trade Monster is another good one. I've had good success with them. I've also used Interactive Brokers as well. So there's three that you can look into. The nice part about Interactive Brokers, like thinkorswim, you can trade any product within that account. So IB offers the universal account, which is really, really nice. So if you're trading Forex, futures, options, you can trade it all within one account.
Okay, something else that we really, Mike, make a note of this. We need to get it on the slide. When it comes to TradeStation, they do have a promotion that's really pretty powerful. It's the what we call the Scholarship Rebate Program. So for anybody new that opens up an options account with TradeStation, and you give them our special code that we have for that, and we've got the contact information in the Owners Club, you will get rebated back to you every trade you make, a portion of the commission, 25% of the commission, up to the full value of the course that you're going to pay for today. So that's a really powerful way to get a great charting platform and actually get the cost of this course covered. And so we really should get that slide in the mix there, Mike. Thinkorswim, yeah, a lot of comments coming in here about Thinkorswim. I agree. Thinkorswim is a great platform to trade at. And, we're looking to get our indicator set on Thinkorswim. I'm going to be honest, there are some difficulties with their back office as far as us protecting the our proprietary indicators. And it's not as easy with their back office at this point to do that. So that's the reason why. Joan's asking the question here, can you walk through a losing trade? I think that'd be a great thing to do. I think it's important as traders to understand the losing side of the equation. So Mike, if you would kind of explain how, I think some, especially new options traders, have the fear of losing the entire value of the option. Explain how that works. Explain what your loss ratio is on that side of it to the gain side of the ratio.
Yep, sure thing. That's definitely an important question. And I'm glad we have people in here asking that because you guys are seeing the big picture. Even if we're seeing a 70% win rate on a stock over time, that still means we have 3 losing trades out of every 10. So you have to know what to expect. When you're trading the options, the nice part about these strategies is you don't have unlimited loss potential. Whatever you paid for the position is your maximum loss. In a lot of cases, just because, if we go back to those examples on Apple, if you were to buy a call option for $1,000, your worst case scenario is to lose that $1,000, but in most cases, I'm going to say 95% of the time, probably even higher than that, we're able to get out of the position and recoup some of that initial investment. Typically, when I talk about our wins, we're showing win rates, on the options anywhere from 50 on up to 100% on the option value. On the losing side of things, on the trades that don't work out, typically a losing trade is anywhere in the 25 to 50% of the option value. So if you're going to buy an option for $1,000, Okay, ideally, we want to see those returns in the, ideally for me, I want to see those returns in the 60 to 80% rate. That's really my sweet spot. On the losing side, typically it's in the 25 to 50% of the value. So if we invest $1,000 in the option, typically we're going to see a $250 to $500 loss. So hopefully that makes sense. Let me know if you want more information on that.
Okay, this next question is coming from Jonathan S. And Mike, he's asking, when trading a call option, if a stock price increases, does the option increase by the same dollar amount?
Another good one, and it all depends on the option that you select. And we're going to walk through that in the training program. It's not typically going to move in a dollar-to-dollar fashion. Okay, and most options that we trade, if you're going to look at the single options, if the stock moves $1, our options usually move 65 to 70 cents. Okay, so that's the typical ratio there on most of our individual strategies that we use.
Okay, this question coming from Claude. He's asking, Mike, do you put a stop in when you buy a call at, say, 25% or 50%? So I think what he's asking there, Mike, is how do you determine where you actually are going to stop out of a trade, and how do you determine where the profit objective is? I had a gentleman early on, Mike, say, why did you get out at that target level? Because it looked like that, the stock you were looking at the time was very bullish and could go higher. So, Mike, what is it that kind of dictates where you set your stop and target?
Okay, sure. Well, let me go back to the chart here for just a second. Okay, and let's go back to the Apple trade. Okay, the reason I got out here is because my system, the active swing trader system, printed the target for me right here at the series of white dots. Okay, there's a calculation built into the system that tells me where to get out. Now, of course, hindsight is always 20/20. Okay, could I have stayed in the trade to look for this move higher? Sure, but what I'm seeing over time is that if I get out at the system-generated target, the system is very accurate with the targets. Okay, I don't know that it's going to keep moving higher. Am I happy to get out here at my full target and book 100% profit? Absolutely. So I don't want to get greedy and hold on to the trades too long, because you have to remember that with a lot of these strategies, if you're buying the options, okay, it's just like an insurance policy. Every day that you hold that option, it loses some value. So the risk that you're taking there is if you hit a full target and you hold on to the trade, well, you have to pay to hold on to that trade every day. So that's why I stick to my system. Remember what I said, the market has a strange way of punishing the people that are not disciplined, if they don't have a trade plan that they can stick to. So for me, I have to stay disciplined to my system and to my plan. So I booked my profit, I was very happy with it, and that's where I got out. Now, to the other part of that question, if I get into a trade, where do I put my stop? When I get into these trades, especially with the directionally based trades here, I manage the trades as if I were in the stock itself. Okay, so once I buy the option, I set the option aside, and I manage the trade as if I were in the stock itself. So as soon as I hit the target here, as soon as the stock price hits this target, I exit my options trade. On my losing trades, if it flips around and hits my stop, as soon as the stock price hits that stop, the red dot here, I'm exiting the options position. So for me, it's about setting price alerts for myself. So once I get into a trade, what I like to do is I'll set price alerts here, just in front of a stop or just in front of a target. So that allows me to know when we're approaching a stop or a target level. Can you place certain order types in your broker platform, which will allow you to place a stop order based on the stock price to sell the option? You can definitely do that. There's conditional orders that you can put into place. And I'll walk through all of that on the owner site.
All right, again, let me just say, if we've missed your question, go ahead and get it in, because the questions are flowing in pretty quickly here, and sometimes they scroll past. So we want to make sure that before you leave today, your question is responded to. This question coming from Steve H. He's asking, what are the rough costs for NinjaTrader and TradeStation? So for NinjaTrader, you can sign up on a monthly basis with them, I think for around $50 a month. Or you can buy a lifetime license for $900. So that's on the NinjaTrader side of the equation. On TradeStation, All you have to do with them, and again, I talked about that rebate program they have. If you fund, I think, a minimum account of $5,000 with them, open up a stock and options account, then you really, there's no ongoing fee. You will have, in both cases, from your broker, a fee for the data feeds that you want to look at, whatever that might be. So there's that cost. But as far as the platform cost goes, that's the answer for that.
Brian, let me add just one thing to that. The nice part about trading stock and options on the data feeds, the fees that you pay for your data, on the stock side, it's very cheap. Okay, typically you're able to get your stock data, depending on your platform, depending on the charting platform, for less than $20 a month. I mean, it's very, very inexpensive. Probably even less than that, actually.
Okay, and let me say that we are getting through the first 15 bonus. If anyone is still interested in that, I would encourage you to get signed up. Edward W. asking, you say that you just ordered the package with insurance. Will I be one of the first 15? Yes, Ed, you were in the first 15, so you're good to go. So again, if you're interested in those special bonuses, make sure that you get signed up here in the next few minutes. Henry B. is asking, Mike, how many instruments are on your watch list? And 20 minutes a day is not a lot of time to look at. And I think he's kind of challenging you maybe a little bit there. Is 20 minutes really enough time to look over your trades?
Sure. No, it's a valid point. Number one, I'm going to give you access to 25 trade plans. I'm not expecting you to trade all 25. In fact, my personal watch list for myself typically is anywhere from 12 to 18 names. That's what my typical range is. Because if I go any more than that, I mean, I can definitely find more products that I would love to trade. But then it's going to start taking more time every day. Okay, I want to keep this very simple for myself. So when I say 20 minutes a day, that's exactly what I'm doing. Okay, so let me go back to the charts here for an example. Okay, and let's just say, I've got 5 charts shown right here. Let's just say your watch list is 5 names. Okay, just to keep it simple right now. Okay, so if I were to come in Monday morning, okay, I try to come in typically before the market opens every day. If I were to scan these 5 names, okay, let's look at Priceline. Priceline's in a long setup. We hit the first target. Okay, I'm looking for the second target. I know that at the first target, I move my stop to break even. Okay, so Priceline's done, right? I've already got my plan for the day. I know where my target's at. I know where my stop's at. I'm good to go. Apple, we just triggered into a long setup on Friday. So I've got my target in place. I've got my stop in place. So for Monday morning, Apple, I'm good. I'm done. Nothing for me to do there. Tesla, Monday morning, is there a new setup? No, I just got out of my trade at a full profit. I'm waiting for the next setup to print. Tesla's done for Monday morning. Okay, Google's in a long trade. Okay, we've got our target level marked, our stop level marked. So Google for Monday, I'm good to go. I'm done. Amazon, we've got a long trade that's setting up. So I've got to mark that entry point. And once the market opens on Monday morning, I've got to track Amazon. Okay, I'm currently in a short position. But if my system flips over, if I get triggered into this long, I need to make sure I get my order placed. So I may have one order to place Monday morning, and I'm good. So on 5 names there, can you see how I just went through in less than 2 minutes, and I've already got my plan in place on 5 stocks? Now, I'll come in periodically throughout the day. I'll typically come in around the lunch break, and I'll typically come in once in the afternoon, and I do a similar update. I just take a quick peek, a few minutes or less. Obviously, if we have stocks that are setting up and you need to place orders, that's going to add on a few additional minutes. But can you see how having that powerful calculator on the chart, it keeps things very, very simple. I'm just waiting for the next setup to print. I'm not stuck making calculations and analyzing different chart formations. It's not necessary. Everything's built into the calculator. Okay, so I'm not trying to sell you the magic bullet here. Okay, but does it make life easy for myself? Absolutely. So I just did my these were the 5 names that I trade. I just did my Monday morning recap, and I planned out my Monday session in less than 2 minutes. That's the cool part about the system.
Okay, Mike, we still have questions coming in, so I'm going to continue to answer them. Mel G just asked the question, is the system a lifetime license? And I'll answer that one. Mel, yes, it is. So you will have the indicators for life, and the only thing that will cost you ongoing, if you're interested in it, is the Owners Club, and that's the ability to come in and see Mike track the results of trades, also access to the room he's going to do 3 days a week. There's an ongoing cost for that. I think you can understand we need to charge for that to kind of keep that going. It's a very nominal fee. But if you're not interested in that ongoing support, then you can cancel. But again, to confirm, you will have the indicator set, all the trade plans that Mike posted. You can download those. You'll have access to all of that for life. Okay, let's see. Question coming in here, Mike. Can you comment on option assignment and how to handle them? Have you or do you get assigned options?
Okay, great question. When we sell options, typically we don't sell naked options. Okay, whenever we sell an option, we're always hedged with some type of a long position. So if I were to go back to the vertical spread, and let's just go back to Apple since that's what we've been focused on. If I sat there and I bought the 440 call and I sold the 455 call, well, just because I'm selling the option does not mean I'm not hedged. I'm hedged because I've got that long option. So when you trade spreads, could you deal with assignment? That's always a possibility, but if you do get assigned, you never have to worry about it because you've always got that long option there to hedge yourself. All right, I don't have to deal with assignment too often because typically I'm in and out of my trades well before expiration. Our holding times are not very long. So being assigned is not something that I'm super concerned with, but we do cover it in the course. I'll walk you through exactly what happens when that could pop up down the road.
Okay, let's see here. We are getting close to the end of the 15. Alvin asking if he is one of the first 15. And so, Alvin, if you're still on, yes, you're in the first 15. I just got that message and a question from one of my support guys from Ron, actually. So, the common question that's come in, and Jim just asked it again, Mike, are you going to be trading monthly or weekly options at all in the process of what you're recommending?
Sure, we will trade both. I just talked about monthly options, and I'm seeing a lot of similar questions here. Keep in mind, guys, that in an hour-long session, I can't possibly cover all the different ways that we can use options. So I covered the monthly options here today. We will talk through using weekly options. There's certain scenarios where we will want to use weekly options, so I'll cover that. As far as showing different credit spreads, again, I can only show you, a certain number of trades here within the hour. So will we cover credit spreads in the training? Absolutely. We'll walk through a number of different examples so you know exactly how to take those.
Sai is asking here, Mike, are stocks Bernanke proof, or are stocks influenced by news as well?
No, the stocks are definitely driven by news, just like any other market. Look what Bernanke's done to the overall market. I mean, we're at all-time highs. We've barely seen a downtick all year long. So absolutely, they'll respond to news. The good part about what we do, that's why I love the swing trading side of things. A lot of times, by stretching out your holding times, by going with a swing trading approach as opposed to a day trading approach, you're able to filter out the effect of news. Because a lot of times when we see a news release, the reaction is typically just for a few minutes, and then the market goes back to normal. So because we're holding for a period of days, we don't typically have to worry about those mid-morning reports. It's not an issue. The only news release that I'm really concerned with, and I will try to work around, is a stock's earnings release, which will happen 4 times a year. So that's the only type of news that I really try to sit on the sidelines for.
Okay, Nikolai asking a great question here. He's asking, when will the course start? So let me kind of clear that up a little bit. For those of you that have come on board today, first let me say congratulations and welcome to you. You're going to have immediate access once you've signed up to the one-on-one course that Mike talked about. And you can immediately this weekend, if you want to, or the first of next week, start to go through that content that's online and available to you immediately. Then we are going to have our training course, specifically the 2-day, very active and intensive course, is going to be at the end of August, on August 27th and 28th. And that will, again, be in a webinar format. You don't have to go anywhere for that. You can attend from the comfort of your home, office, wherever that might be. But again, I want to stress it's very interactive, and Mike is going to be teaching that class over that 2-day period. Again, that's August 27th and 28th. The detail of that and the room details and everything is inside the Owners Club. So that's the process and how it's going to work. Back on selling naked puts and calls. You probably see that question there, Mike, but do you consider that risky or too risky?
Well, number one, it is risky. I mean, anytime you sell a naked option, you're taking a lot of the benefits of the options and you're setting those aside. So do I do a lot of naked call or naked put selling? I don't personally. If I want to sell premium, I would much rather put on a spread where my risk is defined. I feel a lot more comfortable being in a defined risk position, not to mention by selling naked options, it's going to tie up a lot of capital. Okay, in a lot of cases, brokers you'll have to have advanced approval from them to do so. So for me, I don't do a lot on the naked side. I don't like that. Okay, I would much rather be in a hedged position.
All right, I'm just reading through. Mike asking a question here. As I understand it, making money by selling spreads relies on time decay of the option, allowing me to buy them back at a cheaper price. By using range bars, aren't you removing the time factor, especially when the market moves sideways?
Well, there's a couple parts to that. By selling, just because you're selling premium does not necessarily mean you want a sideways move. You can definitely take a directional trade and sell premium. Okay, so on the trade that I walked through on Tesla, my system was giving me a long setup. Okay, I was bullish on Tesla, but I still sold premium. I sold a put spread. So I still benefit from the directional move on the stock. Okay, that's issue number one. Issue number two, there's other strategies out there that I could place, like an iron condor, for example. An iron condor is a strategy that takes direction out of play. I'm really not using, I'm not looking for a bullish setup or a bearish setup on my charts. If I'm looking at a very choppy chart where it's moving straight sideways, that's where I'll put on a strategy where that's specifically where I want the market to move sideways. Okay, so there's a few different ways to play it. Now, as far as looking at range charts, okay, the range charts will filter out a lot of chop for me. Okay, and it'll wait for the market to move. Okay, but just because my chart is not printing bars or candles does not mean that time's not passing. Okay, you might not see the bars posting on the chart because the market's not moving, but time is still going to pass. So you're still benefiting from that time decay. So hopefully that makes sense. And if it doesn't, I'll be more than willing to spend more time on that in the live training.
All right, I've had a few questions about this. Mark LTD is asking, can you explain the PTU sentiment bars at the bottom? And Mike, I had a few other questions. People were asking, how do you know when to go long or short? I know looking at the chart, it might be a little confusing to you. Obviously, the missing piece here that you don't understand is the rule set by which Mike is engaging the market. What causes a setup to be a setup? So, Mike, maybe address that a little bit without obviously giving away too much.
Sure. Well, number one, the sentiment indicator down here at the bottom, that's really one of our proprietary indicators, and that's really telling me, is the market in bull mode or is it in bear mode? That's really what I'm looking for out of the sentiment indicator. As far as where to get in and where to get out, that's where the calculator comes into play, because look at Apple here on the right-hand side of the chart. Okay, when I see the series of plus signs, that's my entry point. Okay, now why did it print that entry point? Well, I'm going to walk through that all in the training, in the live training for you. So I'll walk you through all the details on what I'm looking for here. Okay, there's a certain sequence of events that I want to have happen before I get a setup. Once everything lines up, my system's going to print the setup on the chart. So I don't want you to think that you're trading blind. Okay, you're going to understand exactly why I'm getting a setup here. Okay, and all I do is I wait for the system to print the setups, and I'm getting long right at the entry point that's printing on my chart. Okay, but again, like Brian said, I'm going to go through in great detail in the live training exactly what produces a long setup, what produces a short setup, so you'll know exactly what to look for.
Okay, questions still coming in, and Steve's asking the question, I currently trade through Thinkorswim, and that is where I have all my funds. What is the best way to pursue adding TradeStation or NinjaTrader?
Well, there's a few different ways that you could go about this. My number one choice for my charting is TradeStation. I've used them pretty much from the get-go when I started trading, so I'm very comfortable with that platform. If you want to use TradeStation, the first way and the best way to do it is to open up a small account with them and go through the scholarship program that Brian talked about, because you can get you can get the platform for free. You can have a small account with them, just keep it going. That's option number one. You can pay for TradeStation on a monthly basis, but it is pretty pricey. I believe you're going to pay close to $300 a month for that. So it's much better just to open up a small account with them and have that going. Okay, option number two is to use Ninja for charting. Okay, you're going to be able to get it. If you're just going to use it for charting, you're going to be able to use Ninja cheaper than you'd be able to use TradeStation. So there's a few different ways that you can do it. My setup right now, I use TradeStation for all of my charting. I do have a small account with TradeStation, so I can get the platform for free. But I do place, I'm going to say right now, 99% of my options trades are placed through Thinkorswim. That's where most of my money is at.
Henrik just asked this question, Mike. He's stating here, is PTU only for directional trading, or does it also give signals, for sideways movement, for calendar spreads, and for example, how do you handle that? How do you know when the market's going to move sideways versus when it's going to kind of break out?
Sure. Well, number one, I don't know when the market's going to move and when it's going to move sideways. But that's why I like to trade the same products day in and day out, because you really start to get a feel for how they move. Right now, Apple's moving great, but we've had a straight move to the upside, pretty much from 390 all the way up to 460. Okay, I've traded Apple for a long period of time. I know that Apple's probably going to slow down here. We're probably going to start to consolidate. So could I take a directional trade here? I could, but I could also place a trade expecting some consolidation. So that's why I like to get familiar with my products. So the PTU system is going to give you directional trades. But inside of that, I'm going to show you ways that you can use the different strategies that benefit from an expected slowdown in the market. Okay, so that's exactly why you have the benefit there of trading the same products day in and day out. Brian, while I'm talking here and while I'm looking at the chart, I just saw a question coming in on the why do I use open, high, low, close bars rather than candlestick. If I switch my chart type here and go to candlestick, nothing about the system changes. Okay, it still prints everything for me. It's just a little different look. If you prefer candlesticks, that's fine. Because I'm not looking for candlestick different patterns to develop, I just like the cleaner look of that open, high, low, close. I just think it's just a cleaner look for me, and that's the only reason why.
Okay, sorry, I was muted, and I asked that question, and you didn't hear it. So here we go. Steve H. asking the question, Mike. When the system signals a buy or a sell, how much time do you typically roll into the option? In other words, which option, looking out into time, do you normally purchase?
Well, it varies depending on the product, and again, it just goes back to being very familiar with your products. I have some products that over time, my average holding time is anywhere from 2 to 3 days, and then I have other products where the average holding time is 2 weeks. So that really, my average holding time, which is what I'll walk through in the training with you, that really starts to factor into what option strategy is best to use. Okay, there's a very specific set of criteria that I look for with each one of these strategies. So hopefully that makes sense. Hopefully that's what you're asking. Let me know if you need me to go in a different direction.
Okay, we are getting very close to the end here. I think we pretty much have all of the questions answered. I'm going to give a final call out. If there's something you want to ask, go ahead and get it in there in the next, say, 30 to 60 seconds. And otherwise, we're going to bring things to a close. Question just coming in. Can you explain what kind of ratio spreads that you use, Mike?
Well, obviously, I'll go into great detail in the training. Basically, what I'm looking for on a ratio spread, if I want to get into a position and I want to, instead of, when you take a look at a vertical spread, typically if you're buying one option, you're selling one option. Okay, that's how a vertical spread works. But if I'm trading multiple contracts and I get in and I want to hedge part of my position, I don't want to hedge all of it. So let's say I go in and I buy 4 options. What if I only sell 2 options to offset a part of my cost? Okay, that's one way to use a ratio spread. I'm going to walk through all the details of how I do that in the training. There's a lot of different ways that you can use a ratio spread.
Okay, and I think that's it. So again, I want to say thank you for all of you that attended today. It's a Saturday. We do appreciate your time. I hope you found the information that we shared with you today valuable. And for those that did sign up for the class, welcome on board. And we look forward to doing everything we can to help make your training and experience with NetPicks very valuable. And obviously, we look forward to the class here at the end of August. Mike, I want to say a special thank you to you for being with us today and the valuable information you shared from your experience in trading options. And again, thanks for being on the call today.
No problem. I too want to thank everybody for joining us. I know it's a Saturday. I know you're ready to get on with your weekend. So thank you for taking the time. For those of you that did sign up, I look forward to working with you. So enjoy the rest of your weekend, and we will talk to you guys here soon.
Have a good weekend, everybody.